All right, I think we can get started. That's okay with everyone. Good morning, everyone. Thank you for taking the time today to participate in this important webinar.
I'm good, hon. I got it.
We will be muting everyone's microphone during this presentation, but we encourage you to ask questions through our chat feature. In an effort to make sure our Chamber small business members have every opportunity to get their questions answered on how to access federal relief funds, the KC Chamber is bringing you a webinar led by federal staff experts for US Senator Josh Hawley, who sits on the Senate Committee for Small Business and Entrepreneurism. According to the Washington Post, the Congressional Small Business Committees came up bigger than ever before in the fight against the economic contagion caused by the coronavirus impact on U.S. workers, as they crafted a rescue package for small businesses that, if successful, could provide a lifeline for countless bars, restaurants, retail shops, and other storefront operations. Joining us today to discuss the congressional effort in combating COVID-19 will be Jacob Reses, Chris Weihs, and Caleb Orr. Jacob Reses is the senior policy advisor to Senator Hawley. He advises the senator on a wide range of economic and domestic policy issues, including tech, policy, trade, and healthcare. Jacob Weihs is Senator Hawley's deputy legislative director. He works on domestic policy, economic issues, and also helps staff Senator Hawley on the Senate Committee on Small Business and Entrepreneurship. Caleb Orr is the project director for the U.S. Senate Committee on Small Business and Entrepreneurship under Chairman Marco Rubio. The three of them will be covering all the basics of the small business relief effort available through the Federal CARES Act, and will take your questions on who is eligible, how to apply, how to best use the payroll equation, and they will also touch on how the CARES Act came into fruition and what potential future legislation may hold. I will now turn it over to them to start. And as I said at the beginning, if you have any questions, please utilize the chat feature and we will ask them during Q&A at the end. Thank you.
Hey, can everyone hear me okay? Good, great. Thank you very much for organizing this. We always enjoy our engagement with you guys, and I know that everyone has been spending a lot of long hours figuring out how to take advantage of the benefits that Congress has enacted through various phases of legislation. I'm going to offer a perspective on how we got to where we are and some of what Senator Hawley is looking at going forward, and then kick it over to Chris, who can talk about our office's efforts on the Payment Protection Program, and then Caleb, who I think has joined us by phone, will be able to speak to Senator Rubio's heroic efforts to try to enact this in phase 3. And Caleb has also done a fantastic job of trying to troubleshoot with the SBA as issues have been emerging in real time over the last few days, over the weekend, and is very likely familiar with any issues that any of you have been experiencing. We've had 3 phases of legislation, and each one seems exponentially to have grown relative to the last one. I just want to flag, Caleb informs me he needs to step out probably earlier than Chris and I do, so maybe I'll turn it over to him first. But just we've had these 3 phases. Phase 1 was just initial preparedness money. Phase 2 is this paid leave program. And then phase 3, CARES, has the SBA program. We've proposed a phase 4 that would provide direct support for 80% of payroll up to median wage, direct from the government rather than through loans, administered similarly to how the paid leave benefit is going to be advanced to employers once that is set up. And I know the federal government is working to set up that advanced system over the next few days. They have a 30-day grace period they're giving employers before they have to pay these leave claims while they set these advances up. We think that system, we can piggyback off of that to directly pay for business payroll so that they don't have to worry as much about this. And there's uncertainty about PPP. That money is going out the door, which is fantastic. It looks like every day a lot more of those loans are going out, which doesn't mean everyone who needs them can get them. We think this would be a good supplement to the great work that PPP has started. Let me turn it over to Caleb because he has a limited amount of time.
Thanks, Jacob. This is Caleb Orr with the Senate Committee on Small Business.
Yeah, as Jacob mentioned, as of this morning, we heard that the total number of Paycheck Protection Program loans that's been processed is 36 billion. Those were processed by over 2,300 lenders. And so although we know there are any number of issues that folks are encountering with the banks, the program is getting off the ground. By design, the main lenders in the program right now are the existing 7A small business lenders, and we're working with Treasury to expand the pool of lenders as we speak. The intention of the Paycheck Protection Program is to provide businesses with forgivable loans that they can use for funding their payroll costs, in addition to some fixed costs that are non-payroll, like rent, mortgage, and utility payments. The ultimate goal is to bring as many lenders as possible online, including every bank that's insured by the FDIC and some fintech companies like PayPal, Square, Cabbage, and other payroll processing companies in order to maximize the number of channels by which small businesses can access paycheck protection funds. There are a number of lender certainty issues that we're working through currently. Over the weekend, Bank of America changed its policy. It had prior only been servicing PPP loans for existing debtor relationships, and they have changed that policy to allow for more of their existing customers to access PPP loans. The Treasury Department continues to work on guidance for how to admit new lenders. Over the weekend, they released their banking guidance for new banks to access the system, and we expect early this week for them to release their non-bank guidance in order to increase lender capacity. Many of you may have also seen some of the FAQs for religious organizations released by the SBA this weekend, including churches, which defines their eligibility, and we thank Senator Hawley for all the great work he did to make sure that clarity was given very early in this process. And we expect further guidance to come out from the SBA with regard to how they measure the affiliation of a small business with some of its funding partners or with other businesses for the purposes of defining whether or not that small business is truly under the 500 employee size threshold that is set out in the bill. Finally, we expect some further guidance on some of the accounting issues that have come up. For instance, how to include federal taxes on compensation, like payroll taxes, and also for how businesses can calculate the payroll costs over the prior period in order to determine the loan amount. That is about it for me. Happy to take any direct questions or speak more broadly about the program.
Caleb, I can jump in here. This is Adam again with the Chamber. I have a question. Will SBA lenders already approved and have been doing lending prior to COVID-19 have priority over the newly joined ones?
It's not that they have direct priority. It's just that they already have access to the SBA infrastructure, to E-Tran. They already had interfaces that are up and running. This was one of the reasons why this program was chosen in order to fund payroll for businesses, is because we already had about 800 SBA certified banks that have what's called delegated authority, in which they don't need to get SBA sign off before they make any new loans. And so it was those 800 banks that on Friday funded nearly all of the loans that were funded on Friday. And so we start with that existing network, and then we on-ramp new lenders in order to grow the scope of the program.
Thank you for that, Caleb. Another question is, was there intent of the law to exclude real estate properties?
So existing SBA regulations prohibit a number of businesses from receiving SBA assistance. One of those is real estate management companies. It was not the intent of the law to carry through all of those prohibitions, and so it will be up to the SBA and its process for determining which real estate processing or management companies are able to access the loans.
Perfect. Thank you, Caleb. Appreciate that. All Any other questions quick for Caleb? You can type them in the chat feature. If not, we can continue on.
Yeah, I encourage anyone. Caleb has been talking all day, every day to the SBA about implementation issues, and Chris and I also have been engaging. But if you have questions that your bank has given you inconsistent answers on, or that you've heard inconsistent things from SBA, I'd encourage you to ask right now, because Caleb will probably have some insight that Chris and I may not have about some of those implementation questions.
Perfect. Hey, I got a couple coming in now. Caleb, Jacob touched on phase 4 a little bit. Do you have any thoughts on what you see in relief coming out of phase 4 from the committee?
So yes, as of this weekend, so 36 billion, if you look at that relative to what the program was funded at, that's about 10% already of the funds that are appropriated to the program. Chairman Rubio thinks there's broad congressional support for increasing the amount of funds that are available for this program if they're exhausted before the end of the window in which we expect these loans to be able to be made. Some of our internal models suggest that the funds would be exhausted by the start of June. Depends on how many more lenders come online, and certainly the pace really quickened over the weekend. But we certainly expect to push for more funding. You might have seen over the weekend that President Trump tweeted that he would ask Congress for more Paycheck Protection Program funding if it was the case that these funds are exhausted before all the small businesses that need it can get it.
Thank you. How should small businesses track the funds they receive? Should they put them in a separate account to document the funds, or document the funds that are being used on payroll specifically? How would you recommend tracking what they receive from PPP?
You know, I don't want to give any direct accounting advice. I think your accountant should have the best advice for that. The most important thing to keep track of, though, for the purpose of determining your loan forgiveness, is your payroll cost and your number of full-time equivalent employees. Those are the two biggest factors for determining how much of the loan will be written down via forgiveness at the end of the period. So whatever means is best to keep track of those figures, I would recommend.
Thank you. And was there intent to include the FICA taxes in the payroll cost calculation that you just mentioned?
We expect some further guidance from Treasury to be coming out shortly on the gross payroll issue. The way the statute is written and the clear congressional intent is that FICA taxes not be included in your total payroll cost for the purpose of deciding the loan amount and the loan forgiveness amount. A separate title of the bill deals with payroll taxes, in fact, defers payroll taxes, I think, for at least this quarter and perhaps the next as well. But the intent of the legislation is not to provide a payroll tax cut. It's to offset the purely private payroll costs.
And those, if I remember correctly, those payroll taxes get paid out in 2 phases at the end of 2021, and then the other half at the end of 2022. So it's very generous payroll tax relief. Caleb, correct me if I'm wrong, but that's my recollection.
That sounds right.
And then, Caleb, do you mind touching on a little bit between the difference between the economic injury disaster loans and PPP?
Yeah.
And if you apply for one, are you eligible to still apply for the other?
Yes. So the Economic Injury Disaster Loan Program, or EIDL as it's referred to at the SBA, is the SBA's outstanding kind of traditional loan program for disaster loans. It is totally distinct from the Paycheck Protection Program loan. Whenever we were going into, on Friday actually, for launching the PPP program, there were over 2 million outstanding applications for EIDLs on the SBA website. And so we've been really trying to encourage people to recognize the difference between the two. The PPP loans are much more generous in their terms than the EIDLs are, because the EIDLs are still loans. They have to be paid back. The CARES Act did, however, establish a unique feature in the EIDLs. It established a $10,000 grant advance feature where an EIDL recipient can receive just $10,000 as a grant that doesn't have to be paid back on the front end of the EIDL loan. If an EIDL if a business receives an EIDL, they are eligible to refinance the EIDL into a PPP loan. That is explicit in the bill. And if the amount of the EIDL is actually larger than the amount they could get under PPP, then they're able to bring that larger amount into PPP via a refinance option. They cannot use both for the same purpose, though. You can't, beyond that refinancing, you can't take an EIDL to finance your payroll and then also take a separate PPP to finance your payroll.
But you could use them for separate reasons, though, simultaneously, correct?
That's right.
Yes.
That's correct.
Perfect. So I was wondering, would you guys be willing to give us a little history of the CARES Act and how you came up with the $350 billion in relief for small businesses, how we got to this point?
Yep. So it's very simple, actually. The Department of Treasury economists calculated that $350 billion is what it would cost to finance the payroll of every business in America with 500 employees or less for 8 weeks. And so that is what the PPP loan does. It has a little extra cost on the side for funding fixed costs, and then it also expands it beyond businesses to include some nonprofits with 500 or fewer employees. And so that allows for some margin for the businesses that get it. But we recognize that means that we will probably be oversubscribed, and Congress will have to increase the amount of appropriations for the program.
Thank you for that. Are there any other questions we have for Caleb or the rest of the team here answering questions? We have great resources here that can help you answer any of the questions you have regarding the CARES Act and existing small business relief programs.
Again, if anyone has been hearing inconsistent information from their bank, I would advise you ask now, just because Caleb's going to have to hop off in a minute, and he will have insight that Chris and I may lack about the minute-to-minute back and forth with SBA about how they resolve those questions.
Here we got another one in. Are there any provisions similar to PPP for businesses more than 500 employees?
Yes, there is a mid-sized business lending facility that's appropriated for the Treasury Department. That is still in the process of being set up. I unfortunately don't have the latest information on that facility.
So that's something they should be looking out for. And then another one, can you have a loan amount that started on February 15th and used the payroll costs you have previously incurred?
That's a great question. So the answer is that the congressional intent is yes, although the guidance that's been put out so far is not clear on that front. The covered period for which a PPP loan can be used in statute is February 15th through June 30th. So it's any continuous 8-week period within that window. But the guidance is not clear that you can use the PPP for dates up to February 15th as well. So we're working now on establishing that clarity with the SBA and the Treasury Department. But as of right now, I don't think that particular retroactive feature is operable.
And then should guaranteed payments or owner's draw be included in the payroll calculation for the company line?
Yes, the congressional intent is that the owner's draw can be counted up to $100,000 of income like any other payroll cost income.
And then here's someone who recently applied. The last request they received from their bank was a documentation of payroll through February 15th. What info do you need? 2019 dates or 12 months from February 15th?
You know, it depends on for which purpose they're asking it. In order for determining the loan amount, most businesses will be the prior 12 months, the 12 months prior to February the 15th. For the purpose of determining the loan forgiveness amount, it will be your employee headcount and other wage or salary costs, either in the 12 months prior to February 15th or in January and February 2020 as your basis.
All right, we got another question just in. If I'm a partner in a partnership, do I include my guaranteed payment in my payroll costs along with my employee payroll costs?
We're working now with SBA and Treasury on guidance for K-1 filings. So that will affect many LLCs and partnerships. The congressional intent is that, yes, your payment, your partnership payment, be included as payroll costs up to $100,000 on an annualized basis.
I will do a last call for questions for Caleb. If there's anyone else, please type them in the chat feature. Oh, we just got one right in. Sorry, my computer froze up. If you hired someone in September of 2019, can you prorate their salary for what it would have been for the year?
You know, that's a good question. I don't know the particular. I couldn't answer the specific situation there. I'd recommend you talk to your accountant for how that would apply to the law. Guys, unfortunately, I've got to run to another call with the Treasury Department on one of these issues on the payroll tax, gross payroll issues. So hopefully we'll get that resolved and clarified for you guys shortly. But thanks for having me on.
Thank you, Caleb. Really appreciate what you're doing. For everyone on the call, Caleb has not been sleeping. He's been spending every hour of every day talking to Treasury and talking to SBA to try to channel all the feedback he's getting from small businesses to them so that they answer all these questions, because I know there's a lot that was unclear last week as people were applying for these loans. Chris and I are happy to talk about whether it's PPP issues or phase 4 or how we got to where we are, what our office is doing.
Yeah, and I'm happy to just introduce myself here.
Oh, yeah.
Yeah, hi, everybody. Chris Weihs. I work closely with Jacob on all issues related to sort of small business and the economy for Senator Hawley. And thank you all for joining us today. We know this is both a difficult time and a hard one to sort of navigate all these programs that are coming out. And we know they can have some complexity. So we appreciate your patience with us and your questions as well. So, one thing Senator Hawley's been doing is we've been staying in close contact with our, regional administrator of the SBA in Missouri to ensure that any issues that come up on your end with either small businesses or lenders trying to get certifications and approvals, we can do our best to engage on those issues. So that's something we've been trying to do the last few days as well, as sort of these issues come up little by little, particularly when it comes to the lending side. Caleb obviously is a great resource for this, and we're grateful that he could hop on the call with us today. They've really been a leader in sort of this program. A few things I would just note in addition that may interest you. Caleb talked about the EIDL loans and sort of the grant, $10,000 grant that's sort of added to that program for this period. For any of you that actually have existing small business loans, 7A loans in particular, there is a debt relief program built into the CARES Act as well, such that any fees or principal and interest on your loan is going to be paid for by the federal government for a 6-month period. So that's important for those of you who have existing outstanding obligations. The CARES Act as well obviously includes some business tax and payroll credits, including an employee retention tax credit as well, that can provide support if you have workers that cannot work. These are credits that you cannot be eligible at the same time that you take a Paycheck Protection Program loan. So, I would encourage you to, discuss both with your lender and your tax advisor and your accountants about what program makes sense for you. But, just for your awareness that there is help coming from multiple directions out there as well. So, I think I would just close by saying, again, thank you. We know this is a difficult and challenging time, but we're working, as well, really hard to make sure we can get answers to you. We know the guidance has, been confusing, but they've made some really good progress clarifying a lot of these questions in the last few days. And that continues to happen. And we expect that to continue to happen as this rollout continues. So I think with that, I'll see if you guys have any further questions for us. Thank you.
Thank you, Chris. I had a couple questions come in late that I believe were directed towards Caleb. I'll see if you guys can help answer them as well. Will payroll costs only cover 8 weeks? What happens if the crisis lasts longer than 8 weeks? Will businesses be able to apply for additional funds, or would that be more of a phase 4
Yeah,
concern?
so that's a great question, and this is one of the things that might prompt phase 4 action, either through plussing up the PPP for those who are already participating and for firms that didn't get in on the first round of funding, or through our proposal, which is, we have PPP, which provides these very generous terms for those who participate, for those who are under the size threshold. We've proposed a kind of broader program where 80% of payroll costs for firms, regardless of size, are covered by the federal government, working in partnership with the payroll processors like ADP to expedite the delivery of that benefit in real time to workers so that employers can keep them on payroll without facing substantial cash flow issues if they choose not to lay them off. We think that that's complementary to what the payroll protection program represents, that PPP allows for forgiveness of some obligations beyond payroll, and that's appropriate for small businesses that are the most vulnerable right now. But it is targeting this narrower range of people who have access to the banks that get approved and are able to lend out the money to them, and that are just under the size threshold. So we've proposed going bigger than that and not making it part of a loan system where a lot depends on the decisions of third parties, the financial intermediaries, who we've found sometimes are trying to add new terms on these loans that are contrary to the intention of Congress, which did not want the banks to add all these new conditions on who was eligible. So phase 4 could go in a number of different directions. Our boss is trying to pressure Congress, pressure leadership to aim higher than we did in the CARES Act, but certainly conceivable that this is done through an expansion of the PPP.
Thank you for that. Yeah, another question in. For a sole proprietor LLC on owner draw payment, what's the best way to show payroll amounts for a PPP to pay yourself as the business owner?
I think Caleb was right that probably people would be best off consulting their accountants about the right record keeping to have in place to satisfy the terms of the loan forgiveness. We don't want to give bad advice.
And then another question that came in. We laid off most of our employees after February 15th. We hope to be back in full staffing by June 30th. However, in the meantime, we do not have any work for these employees to do, and most of them will be making more on unemployment. When the $600 from the federal government kicks in for that program. In the meantime, can I hire other employees who we would hire to do things we would not otherwise have the time for them to do, but that would be added value for our company?
I believe so. Without giving advice on what any one firm ought to do, I believe that based on the calculation, you will benefit from the loan forgiveness based on the number of employees you have. And so hiring new employees would help you access that forgiveness. Chris, is that right?
Yeah, that is correct. Part of it is it depends on, when you rehire your employees. So the terms of loan forgiveness is more generous if you were to rehire the employees like directly right away at the beginning of the 8-week period versus at the end of the covered period or the end of June 30th. But rehiring employees does give you a sort of favorable advantage in the forgiveness calculation. That is true.
If we have any other questions, you can type them in the chat feature and we'll get them asked. In the meantime, Chris, Jake, are there anything else you guys would like to touch on regarding federal relief for small businesses and nonprofits? That should be a question. Are nonprofits eligible for these loans as well?
Yes. Yes. This is something that a lot of folks work very hard to make sure would be the case. Nonprofits do qualify. They need to be under the size threshold, and this affiliation rule applies. There's going to be guidance, or I guess there has been guidance from SBA about the affiliation rules applicability to religious nonprofits, because you have churches that have affiliated religious nonprofits that are distinct but affiliated with the church or I use the word affiliated in a kind of loose sense as a legal matter. SBA is clarifying when it is not necessarily the case that nonprofit has to be regarded as an affiliate of the religion itself, so that we can get more of that money to these relief organizations that urgently need it and really are small entities in any meaningful sense of that word.
Thank you for that. It's my understanding that 501c6s are eligible for EIDL, but they're not eligible for PPP. Is there any opportunity for relief for them in the future?
Chris, can you speak to that?
I mean, yeah, that's something we can certainly, consider. 501c6s are not included in the Paycheck Protection Program, but that doesn't mean that, when we come back to work here that we can't explore sort of different avenues for that. But as the law is written right now, it's businesses under 500 employees, as you know, as Jacob mentioned, 501c or C3, nonprofit organizations that adhere to SBA's affiliation standards, and then also some veterans organizations as well.
And then do you either of you know if a sole proprietor can include an SEP IRA contribution in their payroll cost?
It's interesting. I'm actually not sure about that question off the top of my head. The actual calculation of payroll does include, I think, a degree of retirement benefits that might be linked to actual payroll contributions, though, as if you were to have employees. So I apologize. That one I can't give you with any certainty on.
I don't know either.
One thing I would mention for everybody here. I mean, obviously we have some insight to how these programs are playing out and what the guidance is like. But if any of you would like to access the guidance for yourself and read it, I would highly recommend doing that, because each of you have your own sort of unique business structures, and what we're telling you here really should not be interpreted as advice. We're trying to sort of give you guidance to how to sort of understand. The rules have been put out, but again, they're sort of, this is a new program that just came out about a few days ago. So there are still changes and adjustments being made. I would encourage everybody to sort of take a look at some of the resource materials themselves. The easiest way to do that is to go to treasury.gov. There's a banner at the top of the screen that says Small Business Relief. You click on that and you'll see about 6 links that provide helpful fact sheets for borrowers, for lenders, and also, importantly, a 32-page program rule document that sort of outlines in detail a lot of these questions. More detail will be forthcoming. But if you have specific questions that relates to your specific circumstances, I would suggest reading through that. It's a fairly easy to understand document. I understand that it's not going to be exhaustive. There's more stuff coming out because we know that there's a lot of complexities in every single business, but that's really your starting point. That's something that you can also give to your accountant or your tax advisors as well. That's truly the best resource right now for particulars.
I'd like to speak to a design consideration in this program. This was designed to try to limit the amount of red tape that SBA and Treasury would be imposing on the front end that would be delaying the delivery of these dollars. Now, the consequence of that is that the banks have a lot of freedom to operate under the law, but the banks want to make sure that they're actually following the law. And so it's a weird situation where they don't need to get all the front end approvals that they otherwise are used to getting before participating in a federal program of this scale. So the guidance that SBA has been putting out has been very important for giving them the clarity that they need to make sure that they've dotted all their I's, crossed all their T's. What that means is that you heard Caleb say a lot about congressional intent, and that's all true. But until the SBA clarifies these things for the lenders and the small businesses, there is still, regardless of intent, every party involved here, they're not 100% certain. And so that's why we've been very aggressively pushing SBA to clarify the answers to all of these questions. The same is true of the Small Business Committee. But without that official word, it becomes hard to translate from congressional intent clearly articulated in statute to what you are experiencing on the ground. And I know that's frustrating, but the goal here was to try to minimize the red tape on the front end that would prevent the banks from getting these loans out.
Thank you. I'm going to switch gears just a little bit. If we can just get a brief comment on the direct payments that came out of CARES Act as well, just to give our members just a quick update on how that system will work and what they should be looking forward to.
Yeah, this was a major priority for Senator Hawley. He wanted to ensure that for anyone who was a low-income filer or non-filer, they would get the full benefit here. The original version of CARES had the benefit amount ramp up with income at the low end of the spectrum, and Senator Hawley did not think that made sense. So the way this is going to work now is the IRS is going to look at 2019 filings to figure out, there is a phase out of the benefit at the top end of the income spectrum. So they'll look at 2019 filings to figure out what's your income, do you get a smaller benefit or do you get the full benefit? And for anyone who's got direct deposit information on file with the IRS, they're going to have that money in your bank account this month, hopefully within the next few weeks. That's what they've been saying. For those who are, they don't have direct deposit information, they mailed a check, it will take longer for the IRS to send them a check. And so the IRS is encouraging people to try to get them direct deposit information on file. If they're not 2019 filers yet, to file for 2019 and do it direct deposit so that money can get to you quickly. If you are not a 2019 filer, they are allowed to look at your 2018 filings and use that information to deliver this to you. And old information, they will have resources to try to allow you to update old information that's out of date if you're a 2018 filer but not 2019 filer. The law allows for Social Security beneficiaries to have their information on file with the Social Security Administration used in lieu of tax filings if they're not typically filers. The IRS initially indicated that they were not going to be able to do that and that those people would still need to file even if typically they were not filers. But there was a lot of blowback to that, our boss included, and they very quickly reversed course and said that they would be able to cross-reference the Social Security information in order to get people their money quickly. One last note, I know a lot of people have been concerned about if there are overpayments, if the information that the IRS makes its determinations based on from 2018, from SSA, is not accurate or not current, and actually this person should not qualify for the full check, will they have to repay whatever portion they receive that is an overpayment? And no, the law was written to try to minimize the red tape here, minimize the amount of double checking of things that would need to be done. That will probably mean that there's money flowing out that is not, if everyone had their 2019 filings in right now, there are people who will be getting money who in that scenario would not have been getting the same amount of money, but the priority was getting this money out there quickly because people need it quickly.
Thank you, Jacob. If there's any more questions, please ask them in the chat feature and we'll get them asked. Otherwise, we'll begin to wrap this webinar up. If there's anything Jacob and Chris want to touch on quickly before we end, that would be great.
Please reach out if you're struggling with all this stuff and you need help. We've been doing our best to try to help every small business that's reaching out, mid-sized business, large business. Reach out if you've got issues. We'll relay them to the right people or try to address ourselves. We can't solve every problem, unfortunately, because a lot of this is a matter of how this law is being implemented, but we can shake trees. We can get you clarity. We're doing our best to be of service to you. So please reach out to our office.
We actually did just have a question come in. Can you guys touch on the employee retention tax credit quickly?
Yeah, this has been less of a focus for a lot of people. I think it's a tax credit based on, I'm actually not as familiar with this provision as I should be. I think it's like 50% of the employee wages are covered. I don't know the answer off the top of my head on how that's administered. Do you, Chris?
Yeah. So essentially, I mean, this is something, again, that one of the reasons it's different than the Paycheck Protection Program is because it's available to all employers, not just those under 500 employees, number one. So if that business is one of you, this is an opportunity for like mid-sized businesses to get a little bit of help. It's if you do apply for the employee retention tax credit, you cannot apply for one of the small business loans. So that's something to keep in mind too. But essentially this is a credit. It's a fully refundable tax credit that I believe is equal to about 50% of qualified wages for that, certain eligible employers, can pay to their employees. Now there's some, restrictions in place in terms of how it can be used. I believe if you're above 100 employees, this credit only applies to those employees that you've had to put on furlough or you've had to reduce their time. You also have to, I think, prove that your business activity has declined by more than 50%. So that's something to sort of look into. I think if you're in the boat of a company that is either a mid-sized company that perhaps is experiencing shutdowns, or your services have and your revenue receipts have drastically decreased, this could be an option for you. So you would basically get 50% of your employee wages back. Now, it's against your given against your quarterly payroll tax obligation, but it is fully refundable up to $10,000 per quarter per employee for 50% of that. So you can get about $5,000 per employee in credit. So that's essentially how it's structured. I think the Paycheck Protection Program for many firms will be more generous because it's fully forgivable. But if you're a company that, for whatever reason, the circumstances don't really align for you to be to apply for the payroll protection program or an emergency injury disaster loan, this could be an option for you, and I would definitely look into that as well.
Perfect, thank you. And then I'm going to have one last question of you guys. We're going to call it quits. We're going to close it off in the chat feature. Just how's everyone holding up there on the Hill, telecommuting, and what's the atmosphere like in DC these days?
Hard to answer for DC because none of us are interacting with DC generally. We're interacting with our colleagues in our office, and we hear about people in other offices that we talk to. But we're all in our homes trying to make sure that we slow the spread of this, following the recommendations from the president, limiting our exposure to others. For our office, we've been very active with the telecommuting setup. I think some of us actually have found we've been able to be even more productive in some ways under this arrangement. We actually have a very small office because Senator Hawley is in terms of seniority, he's one of the most junior members. And so with less bustle, some of us have been more productive. I'm sure that's not true of everyone. We've been trying to be available around the clock for folks' concerns. This is not for our office a vacation. We are in the office. It's not ideal circumstances, but we're having our, all the same meetings that we would have had otherwise, just trying to do it virtually. It's an adjustment. Chris, do you have any thoughts?
Oh, no, we're doing fine. I appreciate you asking. Look, we're here to help. We know, we're trying to be as accessible as possible. We know this is a tough time for everybody back in the state. And so, we want to be there for you to the extent that we can. I just put my email down in the chat box, so feel free to reach out if you have any more specific questions. We'll do our best. And again, it's been a real pleasure to visit with you this morning. Hopefully, we're going to beat this virus, come back out of it strong, and we'll have some relief coming your way. So again, be in touch, and thanks for having us.
Thank you, guys. I will wrap it up here now. We'd like to thank you for providing this information today, and we thank everyone in attendance for being able to participate this morning. We encourage you all to continue to check the Kansas City Chamber's calendar for upcoming webinars and events. We actually do have a virtual town hall with Missouri Senator Roy Blunt tomorrow morning at 8:30 a.m. You can email me if you'd like to register for it, and I can get you a link to register. My email is in the chat feature, and it's also atimmerman@kcchamber.com. So that's atimmerman@kcchamber.com. It's also in the chat feature. We're also always looking for helpful content to share with our members in the community. If there's anything you would like to learn more about, you can suggest it here in the chat or email Courtney Lewis at the Chamber office. Her email is CLEWIS So that's clewis@kcchamber.com. Again, thank you for your time. There's contact information in the chat feature for Senator Hawley's office and myself. And if you have any other concerns, feel free to reach out. Again, thank you and have a great rest of your day. Bye.
Thank you, Adam.
Thank you.
Thanks, everybody.